Welcome to today's session and thanks for joining. In these videos, I show how you can swing trade profitably in any market condition, up, down or sideways by taking only high probability and low risk trades that have maximum forces from the market, sector industry, fundamental, technical and even seasonality in their favor. I'll show some stocks I traded last week. I shared the analysis publicly before knowing the results as usual. I'll explain how I am managing those. If you stay with me, I will show some stocks getting ready to buy and some that you may buy Monday. You could buy them on Friday near the close if you could find them in real time using Q systems. You could do that. Are these trading tips? It could be, but I do not intend to share them as tips. Rather, I shared them as a technique that you can use today, next week, next month, next year, and forever so that you are consistently profitable. I know you can do it. Compare before buying. That is true for buying strawberries. It is also true for buying stocks. Why I came up with this topic today is because a trader sent me a stock he bought. If someone sends me a stock, I always like to compare it across multiple dimensions to see if there is another better buying candidate. And I found a better one. I thought, why not focus on this topic today? Compare before you buy using live Q analysis. I will do that throughout today's session. Compare what and how? If you are following anything other than buying stocks, closing your eyes, you are comparing stocks in one way or another. Most traders use some kind of technical analysis that essentially compares stocks based on technical signals and filters out many of the stocks. Technical analysis is useful to find trades that match your trading style, and that is a way to compare stocks. To increase probability of success, you may also compare stocks using their fundamentals. Other things being equal, a stock that consistently makes a profit is a better buying candidate than one that consistently makes a loss. And you can find this better buying candidate using fundamental analysis. Due to industry rotation, industry strength is a major influencer of a stock's move. You can increase success rate by comparing industries and buying in the strongest one or the most accelerating one. Every pocket of the market does not move together. If you see a pocket is stronger, for example mega cap, buying into that increases your probability of success. You can also compare based on exhaustion. If one pocket, for example small cap IWM versus large cap SPY, is so exhausted that a recovery is likely, not guaranteed but likely, you may increase success rate by buying into the exhausted pocket. You may compare based on seasonality as well. Everything else being equal, which is rarely the case, buying a stock with stronger seasonality will increase your success rate. Furthermore, you may compare intraday breadth of SPX, NDX, Dow Jones Industrials DJI, Russell 2000 RAR for trading futures, and compare intraday percentage change of market pockets, growth versus value, etc. to buy stocks into them. If growth is stronger, buy growth stocks. If value is stronger, buy value stocks. The way to maximize your success rate and to minimize your risk is to compare across as many dimensions as you can without spending days over it. In today's session, I will compare different dimensions looking for buying opportunities. Greetings, I am Sagar Nandi, retired IT professional swing trading stocks in the USA as well as global markets. I regularly share live market and stock analysis on my website, Twitter handle, and YouTube channel. All these are open to the public. If you have any queries, you may contact me using my email IDs info@superiorprofit.co or tradingprofitably@gmail.com. I use Q systems for my trading. It has multiple components. I'll try to use many of these systems in today's session. Disclaimer, this demonstration is for educational purposes only. I'm not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky, does not have to be. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. First, let me start with looking back. Looking back to the two stocks I shared in the last market recap in Dr. Jeffries Orange County Meat. One of them happened to be a short candidate, FNV, a gold mining stock. Another one was a pharmaceuticals. This is FNV, the gold mining stock. I identified the stock as a shorting candidate on this day in the last market recap. It gave a flow trend following short setup at that time. Stop would be just above recent high. Stop did not hit. It came down, came to the lower boundary on Friday, and then it recovered, creating a long lower tail, and it also displayed a bullish indecision signal. The same bullish indecision came a few days earlier. The stock indeed fell down after I identified the short candidate. I took a short trade, and on Friday I booked profit, entire profit in the position. Not only identifying a trade is enough, we have to size it properly, manage risk, and also close the trade in a timely fashion. Why did I close the entire position on Friday? That is something I will share now. One is the bullish indecision signal that came. Second is the long lower tail. But I also looked at the industry. And I could look at the industry scorecard in real time using Q8 that I did on Friday. I noticed that gold mining was one of the strongest, and it was also one of the most accelerating on Friday. That was one factor other than the FNV's technical chart itself that led me to close the entire position. I also looked at gold, GLD, the ETF. When I identified the FNV short candidate, gold had a long bearish shape candle in both daily and weekly. After that, it little bit went up. We can see that from weekly as well. FNV was weaker, it fell more than GLD. Therefore, I could book it, close it with a profit. Looking at gold, the ETF, gold mining, the industry, and the FNV chart itself, I decided to close the entire position. That was a short candidate that I shared in the last market recap, and I think I shared one buying candidate in the last market recap, that was BHC. Let's look at the chart with the historical resistance trend lines. I shared it on this day, Friday, 1 week ago. That time the trend line resistance was not yet broken. I explained why I still took a long position in the stock. I used covered call with far out of the money call that I sold, expiring far away. So I had enough time in my hand. I entered the trade knowing that the trend line resistance was still there and expecting it to be broken. And indeed, as you can see, the trend line resistance is broken now. Not only that, on Friday, though the overall market was very weak, BHC closed with a bullish momentum color and a bullish shape candle. Trend line resistance got broken. Friday's candle was very bullish, shape color both. I am continuing to hold the entire position. That is how I am managing the two trades I shared in the last market recap. Now let's start with this week's recap. I'd like to start with an important chart, that of dollar index. When dollar index was coming down from here, I noted all the supports that were there, the trend line support, the white direction line support, and I made this exact comment that it would be difficult for dollar index DXY to break through all of them in one go. And indeed that came true. It moved sideways for a while, little bit went up. The two questions that I always ask about an instrument, let's do that for dollar index. What is the trend? It is moving sideways. The range is created by watermark support resistance as well as trendline support resistance. Where is it in that sideways range? It is little bit closer to the upper edge than to the lower edge. At the lower edge, I'd like to buy. At the upper edge, I'd like to short. If I could short dollar index. I don't trade forex anyway, but this is going to help me decide whether it will help the market or hurt the market going forward. It is closer to the upper edge, but it has some distance to go. It is possible that it will go to the trend line resistance and watermark resistance, reverse from there, and if that happens, dollar index coming down may help the market. A lot of stocks fell significantly in last couple of months, not only last couple of days or weeks, last couple of months. If dollar starts to weaken, those stocks the ones that are fundamentally strong in relatively strong industries, may go up at least enough to give me profitable long swing trades. I am going to watch for that. In any case, the observation I made earlier looking at the multitude of supports in dollar index, that it would find it difficult to break through all of them in one go, came true. Let's look at the markets external using the market ETFs. Let's see if the externals are allowing us to buy or allowing us to short, or are they telling us to stand aside. SPY bullish in weekly, bullish in daily, a lot of trend line supports. Just like I said in case of dollar index, I think it will be difficult for SPY to break through all of them in one go. But it may break the first one first, second one next, third one next, fourth one, fifth one. What it also means that to be in a true downtrend for SPY, it will take time. SPY itself is not going to give any short signal anytime soon because of so many supports coming one after another. Trend bullish, preferred trading direction none, bullish, but it is overbought. I can see that from the stretch band indicator, overbought already for 5 days near upper boundary, not a place I'd like to buy. QQQ. Same comment, even more bullish than SPY, far above even the upper boundary, overbought for even more days. Clearly bullish, but too far away from the recent swing low for me to buy. Trend bullish, preferred trading direction, stand aside. DIA. Here the daily has support nearby. Price fell sharply right after displaying the bearish headwind at the very top, at which point bearish headwind came earlier, and if you remember my market recap at that time using the false upside breakout, I had shorted right at that time. Then it fell, came near the trendline support and displayed the bullish indecision cluster. If you remember the market recap of that time, videos are all on YouTube channel. I bought DIA and I closed the DIA long position somewhere here. What DIA is doing now, it has created so far a higher low. If it can go up from here, I'd like to look for industrial stocks giving proper buy setup. Will DIA itself be giving buy setup? Does not look likely so easily because the weekly is having a series of indecision candles in terms of shape, long upper tail, long lower tail, and the backdrop color is still bullish. So even if DIA goes up next week, gives me a bullish color candle, green or cyan, I may not like to buy DIA but drill down into the constituent stocks using Q index and look for buying setups there. At present, it is neither telling me to buy nor telling me to short. Lastly, small cap IWM. If we look at the weekly, this is the most bearish of all the market ETFs. However, weekly also has a trendline support nearby. Daily trendline support is some distance away. In fact, it is the same distance as in weekly. The weekly and daily visual scales are different. What I would like IWM to do is to come to the trendline support and reverse from there. If that happens, then I like to buy IWM or constituent stocks, as IWM is bouncing up from this trendline supports. We have two trendline supports there and also the white direction line. That will be a sweet spot for me to look to buy small cap stocks. Which stocks? Fundamentally strong stocks in relatively strong industry. If it comes down from here, am I going to short? No. The recent swing high is far away. I am not going to short IWM if it comes down from here. What if IWM goes up right from here next week, maybe Monday or Tuesday, without falling? Am I going to buy IWM? No. Looking at the weekly, I am not going to buy IWM on Monday, Tuesday, even if the ETF goes up. In fact, it will just go inside the triangle pattern if it does that. The triangle pattern is a sideways pattern. It's a no trading area for me. Why I say no trading area is because it is very close to the, it will be very close to the tip of the triangle. On this day would be a good day to buy IWM. In fact, I watched this candle on this day and I bought one stock that I shared publicly. That was Upstart. I bought the stock and just like IWM hit trendline resistance and came down, Upstart in fact had a trendline resistance, and when it jumped up, IWM jumped up, Upstart also jumped up. I'll come to Upstart shortly and explain why I closed that trade. Because of this trendline supports and resistances, I entered it, I closed it with a nice profit. So before that, let me complete the thought on IWM. If it goes up, I am not able to buy looking at the weekly, daily, and the fact that it will be near the tip of the triangle pattern. If it falls down, I am not able to short because recent swing high is far away. So currently I am standing aside. I am going to see if it can come to the trend line supports and bounce up from there. Now let's spend a few minutes on Upstart and see how the trend line support and resistance helped me. We were on this day when I bought the stock, and that was the exact day when IWM also stopped right at trendline support. Next day, I tweeted it in the morning session. Upstart jumped up, just like IWM also jumped up, and I had more than 10% profit. I closed the trade and I closed full position. I mentioned that in Twitter that I did not wait. I closed the full position because the trendline resistances, two of them were there. If the trendline resistances were not there, I would probably book partial profit and apply trailing stop using Q protection signal on the remaining position. But I don't like to hold a stock when it is right at trendline resistance, multiple of them. So I closed entire profit. You may look at the tweet. I closed the trade right at this time. If I could look up the tweet. Here. Q charts take the guesswork out of entry and exit. I bought Upstart yesterday right at trendline support here. Today it jumped up at the open and the position had more than 10% profit. More importantly, it was right at the trendline resistance. See, this is how the daily candle looked at that time when I shared the tweet. This is how. In fact, when I closed the trade, price was here. It took me some time to make the snapshot, accompany it by text and tweet about that. I closed right near the top when it was reversing back inside the trendline resistance. What I mentioned in the tweet, and this is why trade management is very important. This is why I like to spend less time identifying stocks to trade, more times choosing between multiple candidate trades, and then most of the time I'd like to spend on risk management and managing my trades. I wrote that one could track the stock in real time today, on that day, to see if it breaks the resistance, goes up. Or one could think that 10% in a day is a good enough profit and book it. And lastly, I added, and if you wanted to know, I booked profit in the trade. These trendline resistances helped me to decide that without ambiguity. The trendline support had helped me to decide to buy the stock. And when I bought the stock, I noticed IWM had a similar pattern. So that helped me to decide to buy as well. So I completed the 4 market ETF study. None of the market ETFs are telling me to buy. 2 of them are bullish, SPY and QQQ, but too overbought for me to buy. The others are not bullish. DIA and IWM, they are telling that it is not time to buy yet, but we may watch out for possible buying candidates in constituent stocks in the coming week. That was external view. Let's see if the internal view confirms that or not. All these analysis I am doing step by step at market level, they are independent of each other. And what I say is that when they are aligned, then I'd like to trade. Those are really high probability trades. When they are conflicting with each other, it is better for me to stand aside. Let's start with the total view. Let's look at growth versus value. Sharply going up. Growth is in favor. Small cap versus large cap. Sharply falling down. Small cap is hugely underperforming, and this is in sync with what we saw, because IWM was the worst performer and small cap versus large cap is also going down. So what kind of stocks are going up? These are growth and large cap. In fact, during the week I shared a snapshot of Nasdaq market breadth, and it's a good idea to look at that because that was a live snapshot. NDX. This is using Q index. I did a constituent analysis and I showed that as of this time, 9:53 a.m. Eastern Standard Time, Nasdaq breadth was very bearish. I showed that in real time. I'm sharing that at 10:23 a.m. What I also noticed that the breadth is weakening from 1 month to 10-day to 5-day to 2-day to real time. So on this day, again QQQ made a new all-time high. see the thing that helps me to decide what to do. QQQ made a new all-time high. The market breadth was very bearish overall. I showed that in another tweet using QH sector industry stock breadth, and then I thought that if QQQ is strong, let's see if it is just because of the mega caps or the overall QQQ constituents were strong. And Q index showed that in fact the QQQ breadth was also very weak. So QQQ going up was not even because of the large caps. All QQQ stocks are large cap stocks. It is only because of the mega caps. So when I combine this insight from Q index with the total view, when I see that large cap growth is going up by combining these two plots together, I know it is not even the large cap growth. It is mostly driven by the few mega caps. If that is the case, how are the mega caps as a whole? I look at that. Before that, let's see some other signals. Bango, irrational exuberance that comes at the top. A breadth signal designed by Mr. Ian Woodward that came this week on Wednesday. Irrational exuberance is not a sell signal, but it is a signal to be cautious. Overall, the breadth is weakening, that I can see, you can see from the percentage of stocks above 50 MA coming down. We can also see that from 3-month new high low coming down. 3-month new high low is a very effective oscillator. It tells us to buy whenever it becomes extremely oversold, hits this lower band. It is approaching the lower band. This is showing two opposite stories about the market. One, it is showing that breadth is coming down. Another one is showing that we have irrational exuberance at the top. Another, we are seeing that 3-month new high low is going to be oversold. Irrational exuberance come at market top. 3-month new high low is hitting extreme bottom. That is two sides of the market that is playing out. One is driven by mega caps, another is driven by all the other stocks. Remember, when discussing how to compare different pockets, I mentioned that if one pocket is getting so exhausted that a recovery is likely, that is a way to compare and look to buy in that over exhausted pocket. This is total view. It is showing it is nearing exhaustion, but it is not there yet. Which pocket is exhausted most? It is likely to reverse. We can find that out by drilling down from total breadth to first the composites. Nasdaq versus NYSE, breadth is weakening in both. We can see that from percentage of stocks above 50 MA coming down, while QQQ, SPY going up. If we look at 3-month new high low, NYSE has hit the extreme oversold condition. So if I am going to compare these two and use exhaustion to look to buy stocks, then I will look into NYSE. But NYSE is very broad. Why don't we drill down further? And I captured that snapshot already. Let me project that. Now drilling down further in terms of market breadth, looking into Dow Jones Industrials, Russell 2000, Nasdaq 100, S&P 1500, S&P 500. Two of them are now hitting the extreme oversold condition in 3-month new high low. That is Dow Jones Industrials, small cap. Things are coming together. When I looked at the external view, I saw that IWM was worst performer, Dow Jones Industrials next, and of course SPY QQQ very strong. And I see that Russell 2000, which has many stocks, almost 2000 stocks, is at the extreme oversold condition. Dow Jones Industrials is also so. Dow Jones Industrials has only 30 stocks. If I am using exhaustion to look to buy stocks, it may be easier to find those from Russell 2000. However, IWM did not give a buy setup, so I am going to wait to get some bullish signal. Oversold does not mean bullish signal. I am going to use actual Q trade setups in small cap stocks to buy next week, provided Russell 2000 recovers. Remember also that I showed the dollar index. It may go up a little bit and come down, and if that does, if in fact it starts to come down, that may help the small cap stock. So I'm going to wait for that. I'm not in a hurry to start buying right now. That is the market level analysis. What comes next? We looked at external view, we looked at internal view, and we use that to compare multiple dimensions. And the conclusion right now is that based on exhaustion, I may look to buy small cap stocks next week. Let's continue with our comparison when looking at the market. Let's look at sector industry stock breadth using QH. This is very bearish. From 1 month to 1 day, sector industry stock breadth all across the board. For sector industries, it is 80 to 100% bearish. For stocks, it is 76% to 82%. That is so bearish that it is looking oversold, nearing oversold. But whether it is really oversold or not, that is going to be seen from bucket analysis. This is too bearish to start to short stocks. Remember, we saw two stories about the market. SPY QQQ at or near all-time high. QQQ made a new all-time high. I think SPY also did. Let's verify that. I don't want to keep it to any chance. SPY made a new all-time high this week. QQQ certainly did. QQQ is stronger than SPY. That is one side of the story. The opposite side of the story is majority of industries, stocks, sectors are down, not only on Friday, not only this week, not only over 10 days, but over whole month. Two opposite stories playing out in the market, and a lot of stocks have fallen a lot along with IWM. Those are actually nearing lucrative buy points. If things fall together, align together, if dollar starts to come down, IWM starts to go up, I think you will have many lucrative buying opportunities. But it is not something that I do to jump the gun and start buying a lot of stocks before the bullishness shows up on all these analytics. They have not shown up yet, so I'm going to wait. And bucket analysis is showing 11.8% of stocks are above upper Bollinger Band. That is not oversold enough. It has to go to 30-40% level. Though on Friday intraday basis, I saw the oversold condition. So that may be a trigger for market to recover next week, along with the 3-month new high low trigger. We'll see that market is bearish. 76% of stocks are below mid Bollinger Band. not oversold based on end of day bucket analysis, but in real time on Friday it did become oversold. What about technical breadth? This is weekly breadth. If you remember last week's weekly breadth, that time headwind alert told us that it was likely the market would come down further, and it did come down. Now also the weekly is very bearish. That is expected. Market came down from a bearish condition. It is bearish, and daily Friday's technical breadth is also bearish across the board except the reversals. That is giving some hope. Remember, IWM is an extreme oversold condition. We saw that from 3-month new high low. And now I see reversals are more bullish than bearish. That means if these things are aligned together, I may have some reversal trades, maybe something that came to support and going up or may go up next week. Those will be lucrative buying opportunities in oversold stocks. That is how I am looking at the market at present. Now let's use the theme of comparison. Let's go back to QH. Look at the sector industry rotation. Start with sector rotation. If I am using sector comparison, I can do that in real time during market hours. The left column, the real time column, would also be filled up here. Now market is closed. Let's use 1 day score. If I am buying, I am going to buy in the strongest sectors, utilities, real estate. Another way is to look for most accelerating sectors. That would be com services and utilities. What is the common between them? Utilities. That is how I can use comparison across sectors to know if I want to buy in one sector as of Friday, that would be utilities. That is using sector scorecard. I could do that in real time also. Now sector tends to be quite broad, so let's do the same thing using industry scorecard. If I am going to, let's go for buying first. If I am going to buy, I may buy in some of these strongest industries, and let me find out one visually, this one. Why I came here, this is one of the strongest healthcare services in relative score. It is also one of the most accelerating. Remember, utilities in sector analysis, I located one sector, doesn't come like that all the time, a sector that is strongest as well as most accelerating. Similarly, industries don't always come easily that are strongest, one of the strongest as well as one of the most accelerating, but I could find such an industry also visually, that is healthcare services. So if I am using comparison to increase my probability for buying, I am going to buy in an industry like this. What about shorting? Let's reverse the score. Let me find one that is very weak. Many, in fact. Diversified metals and minings. Sorry, I double clicked again. Come back. This should be one. If we compare, we may look to short. Actually, no, this is the best one here. If I compare across all the industries, this is one. I am applying the logic I applied to sectors for buying, industries for buying, I am applying the same logic in reverse. Diversified chemicals, one of the worst in terms of score and the most decelerating in terms of acceleration. If I am looking to short, I am not looking to short right now. Based on all the analysis I did, it is looking oversold to me for majority of stocks except the mega caps. Maybe some handful of other stocks, but majority of stocks are looking oversold to me. So I'm not looking to short, but if I look to short, then diversified chemicals would be the kind of industry I would choose by comparing this sector industry scorecard in this case. I remember a gentleman sent me a stock that he mentioned he would like to buy. I will come to that, but before that, let's see how we can use technical breadth for comparison. Technical breadth in QFinder not only shows this graphical breadth, we can look to the stocks giving short setups, possible short setups, and I'm going to short them by the number of setups coming together. The one that comes to the top is SHAK. So this is technical setup comparison. If I am looking at two stocks, SHAK, I'm not going to buy it for sure. If I am going to short, this may be a possible shorting candidate, has the maximum number of possible short setups as of Friday, down by 4.3%. Price extreme middle. I can do the opposite for bullish setups. Again, for this exercise, let me sort by total number of trade setups coming, and let's look at the second stock. I am choosing a stock that is at price extreme middle. Hasbro also went up by a sizable percentage, 6%. By comparison, if I am looking to buy, this is a stock I'd like to consider buying, and that is a comparison using technical breadth. Let's look at these two stocks. SHAK, the technical breadth comparison, technical setup comparison told that this is not a stock I'm going to buy. If at all, I'm going to short it. Interestingly, the bearish headwind came right at the very top when it also hit the watermark resistance in daily, and the bearish headwind came right at the very top in weekly as well. Weekly also hit the watermark resistance. It was an easy decision, low risk short decision at the top. I did not do that, but I just observed the headwind signals effectiveness once more. At present, I see it is coming down from trendline resistance, broke trendline support with bearish flow, in fact a possible trend following short setup. Weekly is also looking very bearish, hugely underperforming the market. Not a stock certainly I am going to buy. If at all, I am going to short. But I am not in the mood for shorting stocks right now for the analysis that I shared earlier. So SHAK shows the value of comparing stocks using technical setups in Finder. And the stock that I found with maximum number of possible buy setups using QFinder again, that was Hasbro. HAS. Interestingly, while SHAK was breaking below trendline support, Hasbro HAS is breaking above trendline resistance. Coming up from yellow direction line, the stock was in an uptrend. So what do we have here? Stock in an uptrend, pull back to support, going up with some momentum and pressure with a breakout with a gap up move with high volume. Weekly is neutral color but very bullish in shape. This is giving a buy setup. So again, the technical analysis is helping me to compare stocks, decide which one to short, which one to buy. Of course, SHAK is in a different industry from Hasbro. If I found a buying candidate Hasbro, it is a time to do another kind of comparison. What comparison? Using Q Vital fundamental, and in this case I'm going to do a peer analysis comparison using hash as the ticker symbol. Let's find the peer stocks and see if hash is the best buying candidate among peers as of Friday's close. Friday was weak for the market, so majority of peers were down. That is expected. If I look up the relative score of the industry, again comparing the industry with other industries, I'm doing it live and I see that laser products is not only one of the strongest but also one of the most accelerating. That is an industry I'd like to buy. And notice also that the industry as a whole is down on Friday. However, this stock, let's go back to Hasbro, broke out. The stronger stocks break out first, and that is what is happening. Relatively, this industry is one of the strongest, most accelerating. A stock is breaking out, so Hasbro is a buying candidate, but I am also going to continue with the peer analysis. Hasbro went up on Friday. Let's see what other peer stocks went up. Two more stocks went up, MAT and FNKO. Let's look at them. MAT I saved here. MAT is also looking attractive. It is at long-term weekly trendline support. The daily long-term support also looks to be very long-term support held. On top of that, it displayed a bullish headwind and bull release signal. However, a trendline resistance is not very far away. This is a stock in a downtrend, MAT, and the peer stock HAS is in an uptrend. I always like to buy the stronger of two stocks if they are similar, in this case in same industry. So I would prefer to buy Hasbro. Let's also look at their fundamentals using the scorecard. Notice the earnings growth of Hasbro, huge earnings growth, 6,000% earnings growth in the latest quarter. Mattel also has high earnings growth. Both have accelerating earnings growth, but Hasbro's earning growth is much higher. And usually the stock market in the USA favors higher earnings growth stocks. And we can see that from the price pattern also, Hasbro is relatively stronger on the charts. Another thing that instantly caught my attention, HAS is giving currently a 4.6% dividend yield. None of the two other stocks have any dividend yield. So from dividend yield perspective also, I would prefer to buy HAS. Again, comparing these stocks in the same industry, Hasbro and Mattel, in terms of technical as well as fundamentals, the comparison is telling that I will go for Hasbro if I wanted to buy one. And this stock is looking good to me, so let me save Hasbro. Okay, let's continue with the market recap. Let's come to the stock the gentleman shared with me, BLMN. He bought the stock, and why he bought the stock? Traders have different techniques, may work, may not work. I may or may not use this technique. I don't use this. What this gentleman did, he is following brokerage recommendations, and BLMN came up in the brokerage's recommendation as a stock that is expected to outperform over the next year. Well, maybe, but right now it is a falling knife, and I never try to catch a falling knife. However, he sent me the stock, so no problem. I did a peer analysis again. Let's go to Vital, extremely valuable. Let's do a peer analysis of BLMN and see that, okay, I don't want to buy BLMN. Is there any other stock in the industry that I may consider buying, or at least getting ready to buy? Again, instantly we see that Friday's market was weak. More than 90% of peer stocks of BLMN, restaurant stock, blooming brands. It's a very weak industry in itself. But I see also that the stock's valuation is undervalued. Not many other things are looking lucrative. So what I did, because I did it during the week when the gentleman sent me the stock, I captured these two stocks, single page scorecard. Let me project those two now, and I will flip back and forth between these two, and you will see how the scorecard helps me decide unambiguously. And that unambiguity you may notice across all these dimensions analysis. This is BLMN, the stock the gentleman sent. It is not a stock to ignore. It has a nice dividend yield, 5% plus, but it is still a falling knife on technical charts. I would not like to buy. Now what I am doing is going to compare this stock with the next one. So this has BLMN has 5.1% dividend yield, and the next stock I found in the same industry, PZZA, Pizza, that is Papa John's. This also has a dividend yield but slightly lower, 3.94. So one is about 5%, another is about 4%. Both could be bought based on dividends. Now let me go back and forth. For BLMN, we can see it is, I'm going point by point. I prepared for this session earlier, marked up all the snapshots. It is undervalued, BLMN. What about Pizza, PZZA, also undervalued. Okay, go back. Earnings quality, number 3, BLMN, medium. It's not a box stock. Number 4, very high negative earnings growth, minus 28%. So earnings quality medium, not a box stock, high negative earnings growth, 0.345. Let's look at Pizza. Earnings quality high. It is a box stock. I never ignore box stocks for buying. It's a box stock and it has negative earnings growth but much lower, minus 1.5%. So across 3, 4, 5, I favor Pizza. Across dividend yield, more or less same. Pizza slightly less, 1% less, valuation both undervalued. Let's look at Pizza. Funds are neutral, insiders are buying, 0.6 and 7. Let's go to BLMN. Funds are bearish, insiders yellow. So across all the dimensions, when I look together, Pizza is a better buying candidate in terms of fundamentals. Let's look at Pizza's technicals. This is BLMN, falling knife. Not going to buy it. Let's look at PZZA. Also falling. However, for last 3 weeks it is stabilizing. It does not have any buy setup. It has a bullish headwind in daily. It came to jump thrust low, price extreme low, gave a big move up 3. Now I would like it to break above this narrow range, go up, and I'll be happy to buy if this narrow range is broken. And I will also of course like to see the industry scorecard showing bullishness or at least acceleration at that time. There are trendline resistances but they are far enough for me to buy the stock because the stop would be very narrow. Remember, all these things are aligning together. Small caps, IWM, and majority of the market stocks got oversold. We looked at the oversold situation from not only 3-month new high low, but also from QH sector industry stock breadth. And in oversold situation, I am looking to buy undervalued stocks. This also has a nice dividend yield. It is a box stock. I like that. So I will not mind buying a stock like PZZA if it can clear this narrow range upward. Why I came to these two examples is that none of them are giving buy setup as of right now, but I'm comparing across fundamentals, across technicals, and I'm finding a better candidate, PZZA, compared to BLMN, and keeping that in my watch list. I will not like to buy BLMN, so delete that, keep PZZA. I'm at 1 hour point, but let me show another stock that I may consider buying. You may do the same. And how I came to that stock is from top-down analysis. Remember, when I looked at the industry scorecard, when explaining comparing industries across strength and acceleration, I found this healthcare services here. This is the one I found that is one of the strongest as well as one of the most accelerating. If I am looking to buy, I will like to buy in this industry. Yes, I could buy in just strong industry, I could buy in just accelerating industry also, but if I have an opportunity to buy in the strongest and the most accelerating, why not? It's just comparing across different dimensions, finding the strongest one to make it higher probability, lower risk. So in healthcare services, let's look at the stocks in S&P 1500. Many of them are down on Friday, as is expected. Friday was a weekday. 57% of stocks were down. Let's find the stocks that went up. One of them that came to my notice is LH. In fact, what I could do instead of what I did exactly is, when I saw that these are the stocks in one of the strongest and most accelerating industries in S&P 500 that went up, I clicked on this lookup Q finder. What it will do, it will only show me the stocks with high liquidity and possible buy setup. I in fact have only one stock that is having a possible buy setup, that is LH. So what did I do? I did a top-down analysis, looked at industry scorecard, used comparison there. I found the candidate stocks. Then I am doing a comparison using QFinder's technical setups, and only one. And interestingly, even before opening the chart, I can see it is at price extreme high, that is aligned with what I am thinking of doing in terms of buying. I also see it has two other attractive patterns for me, not only price extreme low pattern, but a squeeze move bullish pattern and a fan out bullish pattern, and it has a possible bullish flow setup. Now is the time to look at the stock LH, LabCorp Holdings, and once again, the bullish headwind and bearish headwinds are unique signals. Sometimes I also wonder how they appear right at the top, in this case in weekly, from where we had a sharp down move. Now 1 week ago it had a bullish headwind right at the bottom, incidentally at which point we had a very long-term trend line support in weekly. The bullish headwind and trendline support did what they were supposed to do, point to a possible up move. This week we closed with a bullish shaped candle. The backdrop color changed from bearish to neutral. That happened in a very bearish market, and on top of that we have a bullish reversal in weekly. While that all happened in weekly, in daily we had a bullish headwind here, gave rise to an up move that was enough to book profit in a swing trade, came down, created a false downside breakout, stopped at the same trend line support that was there in weekly, and now it regained the watermark created by the bullish headwind with a bullish flow, very bullish shape candle. This is a stock I would not mind buying. In terms of industry score, it allows me to buy. Both strength and acceleration allows me to do that. Technicals allow me to do that. Stop would be below the trend line support. Now is the time to look at its fundamentals. LH is in Q Vita. Okay, today my system is faster than when I presented in Dr. Jeffrey's seminar last week. This is a stock that has small dividend yield. The dividend yield of 1.44% will not be a reason to buy. Valuation medium. Earnings growth negative, but it is tilting up. Revenue growth negative, but it is tilting up. So what it means, if I look here, it is a turnaround candidate in terms of earning as well as revenue growth. That is matching with the industry's acceleration. I'm going to look up the industry score again. The acceleration is showing, and we can see that visually the industry itself is a turnaround candidate. If I go back to the technical charts, it is a turnaround candidate, and I love turnaround candidates. This is a turnaround candidate across the board, and I would not mind looking to buy this stock next week, and I'll be happier. Remember, QQQ has some way to go before it hits trend line support. Dollar index has some ways to go before it hits trend line resistance. If those movements happen, LH may also come to the trend line support and stop there and go up. I will like LH to do that than to go up straight from here, because if it does that, it will give me a minuscule risk buying opportunity at a very long-term support. Of course, market will not do what I like it to do. So if it goes up straight from here, meaning if the market probably goes up also next week, I may try to buy the stock using intraday precision entry chart. That is how you and I can compare across all the dimensions to find the best buying candidates. That is how you increase your probability of success, reduce risk. That is what I do every day using Q. Let me end today's session here. Thanks a lot for joining. I look forward to seeing you in my next session. Have a great weekend, and as I always say, as these live examples hopefully show, there is no reason not to do that. Trade profitably. Thank you.